Howdy there, folks. We have a lot going on in the market this week. I want to take you through everything that's about to happen here, what's going to go on, things I'm looking at, stocks I'm looking at, things that are going on in the market. It's going to be a busy, action-packed video. I appreciate y'all, as always. Also, if you're wondering why my energy's low, I'm just getting a little better. I spent from 4 p.m. to 10 a.m. I was in bed, so I was definitely under the weather yesterday in a pretty significant way. I am starting to get better, and so I thought I'd record this video for you guys and kind of take you through what's going on in the market this week. Now, some people have a philosophy of like you shouldn't work until you're 100% better. I have a little different philosophy on that, because what I always found is when I started to get better, if I actually went to work, I started like magically feeling a lot better. When I felt like I might start like relapsing or feel worse after being sick. So it's kind of funny how that works. I don't know, maybe it's just something like when you go back to work, you feel like you're serving a purpose rather than just laying in bed feeling sorry for yourself or something like that, right? I have no clue like on a psychological level why that happens, but I always found like once I went back to work, like I suddenly felt a lot better. And so nonetheless, that's what I've always done ever since. And once I start feeling a little better, like good enough to get out of bed, I kind of go back to work and start doing a few things. But nonetheless, my energy is certainly not to the usual levels, okay? All right, appreciate y'all. Thanks for being subscribed. Thanks for being here. AAII investor sentiment. So the newest numbers came out this past week. This is our, basically, we put together each week for everybody that's in the private stock or the private wealth group, we put together this presentation every Friday, and it takes you through a massive amount of different metrics and different things to look at in the market and where we're trading at. And it's a pretty in-depth report we put together each Friday for everybody in there. And one of the many slides we put together in there is just the AAII investor sentiment. And I think this is something important to keep an eye on this week, as we've been getting more and more bearish week after week after week in the market. And this past week, we're getting very, very close to 50% of investors are bearish on the market, right? We had a slight bit of people basically shift from neutral over to the bullish category, but nonetheless, folks, I mean, you can see it. It's pretty self-explanatory. We're extremely, investors are extremely bearish on the market. But I want to show you something. It's very interesting that a friend sent me. This is very interesting. And let me show you this, because I think a lot of you guys are going to love this. And it's the truth. And you might have heard this before, you might not have, okay? But a friend sent me this tweet that somebody tweeted out. And it said, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die of euphoria, okay? And so, it's a famous saying in the market. I don't think enough people have heard that one, but it's the truth. And if you look at the market we've had so far, right, where a lot of stocks have started to come back, let's say the NASDAQ has started to come back quite a bit, right? And you're getting a bottomish process in countless stocks. You can see it. Like, look at the numbers. I mean, almost 49% of investors are bearish on the market, with the far other majority basically being neutral. That's a super pessimistic market, right? But if you go back to any bad market we've had throughout history, they were all super bearish right before they bottomed. And they continue to be very skeptical of what was happening from there. Now, this was an interesting comment I saw below the tweet when I clicked on it. It said, how many bull markets can you find that start with failing banks? Actually, a lot of them, including 08, 09. If you look back at the 08, 09 market, right? Market bottoms, and it kind of double bottomed actually. It bottomed in the fall of 2008. It bottoms again in very early 2009. It kind of double bottoms, okay? Meanwhile, that was just the start of failing banks. What happened in 2008 was a smaller amount. And I went through this recently on the main channel here and showed you guys the majority of banks that failed were in 2009, and 2010 was even worse. 08 was just the start of falling banks, but yet that's when the market bottomed in the fall of 08 and then again in early 09. Isn't that interesting, right? And so people actually, I wish folks did a little more study on the markets over time, because you'll find these things that people put out there that people think, oh, that must be accurate, that must be real. And then you look at the actual data, the actual information behind it, and you realize, oh my gosh, that's not what happened. A totally different situation happened, and the market did bottom in the first year, a bunch of banks failing. So interesting, okay? Now, a lot going on this week, a lot I'm keeping my eyes on, okay? Carnival Cruise Line, CCL, they're reporting Monday before the bell. This stock's $8-9 here recently. And a stock like CCL, right? I mean, they got tore up from Rona. We all know that. they didn't deserve what they got in that situation. Cruise lines being completely, basically you can't even cruise. Like, that was devastating to their business, right? But it's interesting. I will say, we'll hear what they have to report for numbers here. But I got to say, look at the growth for this company's expected in 23, right? 72% growth, getting to almost EPS, let's call it neutral, which is an important factor for this company to stop losing so much dang money, which once again is not their fault. It's really Rona that put them in such a bad position, right? But it's interesting because next year they're expected to get extremely profitable again. And if you remember Carnival Cruise Line prior to Rona, this was an extremely profitable company. It was a cash flow beast. Now, if you want to look at cash flow beast companies, consistent dividend paying companies, a company like Carnival Cruise Line was that company. I owned this stock prior to Rona. It was a great dividend company, right? Until they were forced to shut down their business because the government shut them down, right? But I mean, when you think about it from that context, it's pretty darn intriguing. Is it a stock I'm going to buy? No, because they've had to take out so much more debt over the years that I'm not really interested in getting in it. But I got to say, I wouldn't be surprised if this one has decent capital appreciation over the next few years. Tuesday before the bell, Walgreens' report, okay? Is a really intriguing one. So around a 6% dividend yield right now. That's insane for Walgreens. I've never seen the dividend yield as high as it is right now. 6% dividend yield right around. Now, it's interesting because this company is expected to get more profitable next year than this current year, right? Expect to have slight revenue growth. But if you kept track of the Walgreens story, they recently got canceled, okay, on Twitter. This was a couple of weeks ago. Now, we're going to get to find out in their earnings, in their guidance, does it matter to be canceled? We're going to find that out because they were trending on Twitter for like almost a week, right? Everybody wanted to cancel the company. And we're going to see, does it even matter? Is cancel culture really going to affect their business or not? And we're going to find that out in a few days from now. And so I don't care if you own Walgreens stock or you don't own Walgreens stock or you're not interested in it. Just look at their earnings and look at specifically their guidance for next quarter. And we're going to get to find out, is cancel culture something that really devastates you as a company, or do people just move on so fast that it really doesn't even matter? We'll find that out very soon, folks. MU is reporting Tuesday after the bell. You have to pay attention to MU numbers. They're a semiconductor giant in terms of selling memory chips. They're one of the biggest memory chip companies in the world, okay? And if you want to know how the semiconductor industry is, how basically almost the entire electronics industry is doing, pay attention to MU numbers. This is a stock that hasn't done much over the past 5 years. It's up 17%. And keep in mind, MU doesn't pay a dividend. So what you've gotten from MU is that's it, 17% in 5 years. And what's incredible about that in regards to MU is look at the net income for this company over the years, right? I mean, my gosh, $14 billion in net income. And I know most people that watch my channel are more sophisticated, so you know net income. But for anybody that's watching this video right now that's not very sophisticated in the market, net income is basically what actually reaches your bottom line after all your expenses are taken out, taxes and all that stuff. What's actually left over, okay? Revenue's top line, just what's coming into your business. This matters more. Net income, $14 billion, $6 billion. 2.6 billion, 5.8 billion, right? $8.6 billion. It's an incredible amount of net income. I mean, what do we got here? 20 billion, 22 billion, 27 billion dollars, $36 billion in net income in a 5-year span. It's insane, man. Absolutely insane for a company like MU. But they do have an issue. They're expected to lose money this year. And their revenue is expected to crash this year, okay? So that's the issue with MU. You look at this company, they've been tearing it up. Their net income's massive, right? They're basically almost a needs-based company in the memory market, right? But they're expected to have this horrible year this year. And so the question is, do you want to step in on a company that basically hasn't done much in the past 5 years? They've proven they can have great net incomes, but they're going to have likely a disaster of a year this year. And actually, what I will say is years like this are the best years to step in for a stock like this. Will I be a buyer of MU? Probably not. There's too many other stocks that are interesting to me. But I got to say, this is when you've got to be a buyer of a stock. When they have a disaster year like this, because I can tell you, all years won't be disasters for MU. They'll get back to likely huge profitability, and they'll likely start throwing off billions of dollars of net income again. It's just this year is going to be really bad for them. 2024, they're expected to start improving the business once again for MU. But yeah, interesting earnings to pay attention to. If you own any electronics-related companies, semiconductors, you're looking into any, you're thinking about investing in any, pay attention to MU earnings. They're going to tell you a lot. You know what's going to give us a lot of information? This one matters substantially. Watch this earnings on Wednesday before the bell, okay? Paychecks. Paychecks provides integrated human capital management solutions for human resources HR, payroll, benefits, insurance services for small and mid-sized businesses in the United States, Europe, and India. Now, pay very close attention to what their earnings are, okay? This is a company that basically deals with people getting paid, okay? And so they're going to give you, there's certain companies I always like to pay attention to see how the economy's doing, okay? Some of those companies are companies like UPS, companies like FedEx, the railroad companies, okay? It can even be home builders in certain time periods. Recently, I don't think they've been as good of a gauge on the economy because of, kind of going through a boom and bust of housing here recently. But there's certain companies. I think a company like Paychex is phenomenal to pay attention to, folks. You're going to get a good gauge of what's actually going on in the economy, bad, good, or anything else. So watch that earnings, pay attention to it. Believe me, this one's on Wall Street's radar to pay attention to. And, the other thing about this Paychex company, it might actually be a company worth researching. For some of you guys that might be looking at a dividend stock, right? GVD, my strategy, growth stocks, value stocks, dividends. Building out a great portfolio of 10 to 20 stocks, growth stocks, value stocks, and dividend stocks. This definitely kind of fits the category of dividend stocks, right? About a 3% dividend yield on this one. It's a growing business. PE's not crazy. So, yeah, if you guys want to do some research on a company, maybe do a little research on this Paychex company. Might be interesting, okay? Might be worth just kind of researching and do a little work on there. This one's the one I'm most excited for. I got to be honest. For this week, this one I'm most excited for. This is RH, super high-end furniture company. They really sell to the wealthy, okay? And the reason I'm so intrigued to see the RH numbers is not just because I actually like the company, I might own the stock at some point in time, but really I want to know about luxury homes. I really want to know how the luxury market's doing, how that economy's doing, how rich people are feeling. Are they ready to go out there and start buying homes? I really want to hear what RH's guidance is. RH is going to tell us if rich people are ready to go out there and spend, or if rich people are really still like, nah, I'm not. I'm still holding budgets tight right now. I think that's an important thing to kind of understand about the economy, right? Because when rich people start spending again, it's usually, I would say, a very bullish thing for the economy, because that means those rich people ultimately, they own assets, right? They might own many homes, many stocks, assets in general, right? And so when those folks feel like assets are going to start going up again, they're going to start going out there and spending, right? Because they feel comfortable with that. And so an RH company is a perfect one to pay attention to see what the rich are actually doing. Are they ready to go out there and spend? Start buying $5 million, $10 million, $2 million, $15 million homes again? Or are they kind of just, nah, I'm not really ready to spend, six figures to update my furniture in my house or buy a new house or something like that. So important company to pay attention to. Keep an eye on that one, folks, okay? Next stock I'm interested to just pay attention to this week is ELF. So ELF has been reaching new high after new high after new high, including another new high this past week. It ended on another new high. And for a stock like ELF, I'm just kind of keeping an eye on it because I'm like, when does this end? I mean, this stock just keeps going up and up and up and up and up. But I will say with ELF, the PE metrics are getting pushed now, okay? I mean, we're trading at about a 47 forward PE for this company, right? Market in general trades at 20-ish forward PE. So we're well over double up what the market trades at on a forward PE basis. So we're getting very pushed. Now, the interesting thing in what causes a lot of confusion in regards to this, okay, I'll be quite honest, is check out the growth rates expected for this company. 13 analysts cover this stock, okay? 40% revenue growth. So the question is, what are you willing to pay for a company that is going to have their EPS go like this year, from 84 cents to $1.39 is what analysts believe. A company that's expected to, and they've actually beat a lot of analyst numbers over the years, right? Expected to have 40% plus revenue growth. What do you pay for a stock like that? The market in general, I mean, if you look at the average stock in the market, okay, the revenue growth of the average stock is like 3 to 5% usually, okay? So we got a company here that is going to grow potentially 10x the market revenue. So does it deserve 10x the valuation? Well, then in that case, it would be a 200 forward PE, right? I don't know if I would say that. But at the end of the day, that's the confusing part of a stock like this. And to add more confusion to the whole story is look at next year. Not nearly the EPS growth expected next year. We'll see what they guide at for next year and see what happens there. And then from revenue growth standpoint, 15% is pretty lackluster when you're coming off 40%. So that just adds an extra element of confusion with the stock like ELF. So I'm just kind of keeping an eye on it. Obviously, I own the stock. I'm about as happy of a shareholder as you can possibly be. But I do wonder how much this momentum can carry along for, okay? And another stock I also wonder this, right? There's a stock like Meta. Meta closed at another new high this week. It just hits new high. It seems like week in and week out. It seems like the market goes down, Meta goes up. Market goes up, Meta goes up, right? The stock just goes up and up and up. We're doing tremendous. It's the biggest stock I own in the public count. It's even bigger position than Tesla right now, okay? And of course, next time Tesla goes on a beast run, maybe Tesla will eclipse it. But as of right now, this is my biggest stock in the portfolio, right? And so I'm just keeping an eye on this one. No, this is Meta since November versus the S&P 500 versus the Dow Jones Industrial Average. Meta's up 130%. S&P 500 is up 6%. The Dow's up 0.5%, right? And, they love to make fun of us stock pickers. When our stocks are going down, they love to shout it from the rooftops. They love to make fun of us, call us names, say we're idiots, we don't know what we're doing, right? But when this happens and our stocks go up 130% while, the Dow does nothing, they're real quiet, aren't they? They're real quiet. So you got to understand, as a stock picker, that's just something you have to deal with. When things aren't going right for you, you're gonna have people screaming from the rooftops. And when things are going wrong for you, I should say, and when things are going right for you, no one's gonna be there to pat you on the back. They might be there to ask you for some money, but they're not gonna be there to do about anything else for you. Okay, and so just keep that in mind, and remember who you're doing this for. You're doing this for yourself, right? And you're doing this for your family. And so, whatever other people's opinions are, it'll all's irrelevant in the long term, right? Because the only people that really care about you are your family, or you, right? In your financial situation. And so don't let other people discourage you from what you're up to, what you're doing, what you're accomplishing. Because when you have that success, they're not going to be there to celebrate you. I can tell you that. Unless it's to ask for money from you. That's about it, okay? That's about it. So, that is what it is, right? It is what it is. The S&P 500, there's the top 10 stocks for the S&P 500 so far this year, right? We got NVIDIA as a top returner, 86%, right? Meta, 69%. So you look at a year like this year where the Dow is doing nothing, right? Which is the index the masses look at. And meanwhile, look at the stocks. Remember, this is just the best stocks, right? There's a ton more stocks I can show you that have 30% gains, 20% gains this year, 10% gains that are eclipsing the market. But you don't hear a lot about that when this is doing good. I can tell you 90% of the population, if not 90% plus of the population, has no clue this is going on. They have no clue the money people are making in the market. And that's good. I like that. Because what scares me is when everybody is paying attention to all the money being made in the market. And everybody's telling their friends and family, look at all the money I just made in this stock, in this stock, in this stock, right? Because that's when everybody gets in. That's the market we had, folks, at the end of 2020 into the beginning of 2021. Everybody and their grandma was talking about stocks, how much money you can make, how much money they were making. Oh, I just made 8% a day on this stock, 10%. Oh my gosh, right? And that's when you need to be scared. Everybody was bullish. The bullishness on the market was at extraordinary levels, right? And just keep in mind, whenever we have that in the future, worry about that. The thing I love about this market is we're making a ton of money, right? A ton of money. And no one's talking about it right now. No one's talking about it. They have no clue that this is going on. 99% of the population has no clue that this is going on right now. And so I feel thankful for that. Thank goodness, okay? And whenever everybody's talking about stocks again someday, just know we might need to jump out of the pool, okay? Hope you guys enjoyed today's video. As always, I appreciate y'all. I obviously don't have my normal energy levels. Tomorrow I should be a lot better. Tuesday I should be all 100% better. So I appreciate y'all. Busy week in the market. Thanks for being here. If you're looking to join my Patreon, you enjoy the content, you get value out of it, you want to support the channel, that's going to be in the description area. Might also be the pinned comment down there. I actually just made moves in there. If you're looking to apply to join my private stock group, the private wealth group, if you want to take investing much more serious, then check out the description area also. That'll be to fill out an application to join us in there. Much love and have a great day.